Venkatesh. Today's Indianomics is on stablecoins. Actually, why stablecoins today? The total market cap of all cryptocurrencies as of this moment is $3.9 trillion. It has surpassed India's GDP, which economists peg at $3.86 trillion as of June 30th. Today's market cap of cryptocurrencies is a 50% growth from year-ago levels and a 10x growth since 2020. The reason for the recent spurt is the Genius Act in the US, which has legalized the issue of stablecoins by private entities. Now, one may have many kinds of issuers and currencies like, say, Amazon money or Walmart money. Lesser-known crypto issuers and tech companies may also issue their own stable coins, and the market may value them as seamlessly buy cryptocurrencies. It's possible that illegal and ill-gotten gains may change hands via stable coins and cryptocurrencies. To understand how our lives may change, we have with us Professor Ishwar Prasad. He's Professor of Economics at Cornell University, and he has recently authored a book, The Future of Money, and therefore has dealt with cryptocurrencies in detail in that book. Professor Prasad, thank you very much indeed for your time, sir. So can you begin by first explaining how stablecoins differ from cryptocurrencies, and then we delve into the Genius Act?
Thank you for having me on your show, Lata. So this is indeed an important moment for the evolution of cryptocurrencies, which are becoming increasingly mainstream. Now, the key difference between stable coins and so-called decentralized cryptocurrencies like Bitcoin and Ethereum is that when you think about something like Bitcoin, there is nothing clear anchoring its value. And it's ended up having very volatile value. So while Bitcoin was originally created as a method of payments that would not require using a traditional commercial bank or a credit card provider, its very volatile value has meant that it's really not useful for payments. Stable coins, on the other hand, get their stable value by being pegged to the coin is backed up by reserves of that fiat currency. So for instance, dollar-backed stable coins are backed up by reserves of US government securities and so on. So that stable value allows them to be used in payments. So what this means is that stable coins, while they're being used as payments, in a sense, get away from the philosophy of Bitcoin, which is to have everything be decentralized, including the issuance, the value, the governance, and so on. Stable coins are issued by a particular cryptocurrencies we're supposed to deliver, which is an alternative method of payments.
Fair point, sir. In fact, they're going to be regulated by the FDIC, by the perhaps even the US Fed and state banking regulators. So it's not quite like Bitcoin, which is kind of regulated by algorithms. But let me come to the Genius Act itself. It says that there will be state regulators for issuers who issue less than 10 billion stable coins, and those who issue more will be regulated by probably the FDIC or the OCC. Now, when do you think this regime will start? Are we still waiting for
the US Congress, and was signed into effect by President Trump a few weeks ago, but the actual act will take effect either in January 2027 or 4 months after all the rules are written by the relevant agencies. Now, it's worth keeping in mind the context here, and the context is that this administration here in the United States is very favorable to crypto. So the Genius Act is one part of what I think will be a raft of crypto-friendly legislation that is passed by this administration, and certainly stablecoins are going to play a very important role. Traditional finance, as epitomized by commercial banks, for instance, and decentralized finance, which is the world of cryptocurrencies. Now, the reality, Lata, is that stable coins have already gotten a lot of traction. The market capitalization of the two major stable coin issuers in the US, Tether and USD Coin, already exceeds $200 billion. And this legitimization of stable coins is certainly going to give a huge boost.
Yeah. Now, for Tether, which is already, widely used, to be accepted in the Genius Act, say, for instance, say Amazon wants its customers to pay via Tether. For that, there are still some steps, right? Because Tether will have to adhere to monthly disclosures of how much assets it has. The Genius Act has a lot of rules that stablecoin issuers will.
While a stablecoin issuer like Tether has been somewhat open about its reserves, it's not been fully transparent. But nevertheless, the market does seem to take the issuers of Tether at faith because the value of Tether has remained pretty close to one, except for a couple of episodes where it deviated a little bit from that value. There are other stablecoin issuers like Circle, which issues USD coin, the second largest stablecoin, which has traditionally been much more transparent about its reserve holdings. But certainly this act will bring uniformity to the sector. Any stablecoin issuer will have to be much more open entrance, and users can have much more faith that each unit of a stablecoin is in fact backed up by liquid, safe securities.
What is your sense, Professor? Do you think that people will stop, or at least there will be less usage of credit cards and debit cards, and people will move over to stablecoins? Because there are multitude. There's already Tether and Circle. It is possible Amazon and Walmart don't use the exact guess as to what will be the regime. Will Visa and MasterCard lose their proponents?
So we're certainly entering a wild and interesting world of private payment mechanisms circulating in tandem with the traditional payment mechanism, a very important payment mechanism. Now, it's worth thinking about why stable coins are getting so much traction. And I think this is where stable coins have really proved useful in terms of showing us how much more efficient payments can be, both domestically, within the world of decentralized finance, and especially in terms of cross-border payments, where there are enormous inefficiencies, very high costs, very slow processing speeds. So in my mind, the real legacy of stable coins, whatever happens to stable coins themselves, is showing us how much more efficient payments can be. Now, given that we have the legitimization of stablecoin media companies like Meta, which once upon a time did have a stablecoin project that was killed by the US government, to go back to starting to issue their own stablecoins. And there is logic to this because at one level, you want to think about private firms that have very large balance sheets, that have very large networks, adding on a payment mechanism on top of their existing networks. The difficulty, of course, is that we're going to have multiple payment mechanisms, and it's not entirely clear if all of these are going to be equally reliable. So it's a good thing from the point of decline, but we could be in a period of some volatility when we have multiple payment mechanisms and some of them turn out to be less than ideal. And as you pointed out in the introduction, some of them could end up being ones that facilitate illicit activities, money laundering activities, and so on. So the big question is whether we are moving to a more stable regime or one that is in some ways efficient, but could also create a lot of instability.
What's your sense about cross-border, sir? I mean, I'm trying to look at the impact on India first, or countries like India. If we don't recognize stable coins, if we, stay quiet about it, mum about it, then obviously I cannot pay for an Amazon product with stable coins. In that case, do you think countries like us will be impacted in any way?
It is a potentially worrying time for central banks around the world. Even the European Central Bank has come out with a statement that it is worried that it could lose monetary policy autonomy if stable coins become much more prevalent, especially because it looks like the stable coins that the world desires are really dollar-backed stable coins. And given that a dollar-backed stable coin, whether issued by a company like Tether or a big company that has a global footprint like Amazon and so on, that could have much more trust from consumers and businesses around the world than local currencies. I don't think in India we face as much of a problem, but certainly there are concerns that widely used around the world. Now, certainly regulations in a country like India can, to some extent, forestall this from happening. But the reality is that it's going to be very difficult to manage the use of stable coins by private parties, especially because the US financial system remains dominant, and for people to shift onto that financial system is going to become a lot easier thanks to the prevalence of to start innovating in terms of payments. India, in my view, is already very far ahead of most other countries, both advanced and emerging market countries, in terms of the efficiency of its payment systems thanks to the UPI. So I think India has somewhat less to fear in terms of domestic payments being disrupted, but certainly cross-border payments are going to be disrupted.
Yes, it is. Cross-border is very expensive. I mean, I think if I have to remit $100, we spend almost 5% in terms of cost of, very profitable for the banking system. But if the Indian government, or any, for that matter, say Indonesian or Philippine, any of the Asian governments advise or direct their citizens not to pay in stable coins, then do you think the system will be thwarted or impacted in any way? Do you expect them to come up with such rules?
I expect that many national governments and central banks will do that is largely for cross-border payments. But the unfortunate reality that many of these governments are going to face is that if there is such a wide gap in terms of the processing cost, the processing speed, the ability to track transactions, and so on, and especially as stablecoins become more legitimized in Western financial systems, especially the US financial system, it's going to become much more difficult to control. My view has been that when you think about cryptocurrencies, especially stable coins, they're going to substantially reduce the efficiency of capital controls, the ability of national governments or central banks to limit the usage of foreign currencies by their own citizens, and the ability to control both capital outflows and inflows. So I think a far better response by national governments is going to be to beef up their own domestic payment systems and to have their financial institutions start adopting some of these new technologies in order to make cross-border payments quicker, cheaper, much easier to track. That, I think, is the only realistic response that countries have, in addition to improving their own monetary and other policies so that their currencies don't get crowded out by these easily available private currencies from advanced economies.
Okay. The recent, cryptocurrency adoption across the world says that India has 97 million people who have some kind of dealings in cryptocurrencies. Do you think that there can be danger because of this, that even without the permission of the Indian government, there can be large numbers of people who will be handling stable coins and cryptocurrencies?
Now, certainly, if you think about what stable coins do, they provide a relatively easy way to transact within the world of decentralized finance, which is finance that takes place on decentralized blockchains that are not managed by a government or any particular financial institution, but are, as you put it, managed essentially. Stable coins also provide an on-ramp and off-ramp between traditional financial institutions and the cryptocurrency world. So it's going to make it a lot easier for Western financial institutions, especially US financial institutions, to allow transactions that involve stable coins. So if you think about an Indian citizen now who wants to move money into cryptocurrencies, there are going to be increasingly channels to do this without having to rely on traditional financial institutions, which are the ones that are regulated by the Indian government and the Reserve Bank of India. So it is going to become somewhat easier for private citizens to do what they want to do in terms of transacting in cryptocurrencies, and a lot harder for governments to regulate and control.
Okay. Oh, well, I'll have to take a quick commercial break. Welcome back to this Indianomics special on states. I mean, they were always legal, but now they're likely to become a mainstream currency, a mainstream way of paying one another. Aside from the dollar, you can pay through stable coins, so maybe Tether, maybe Circle, or maybe new coins to be issued by perhaps an Amazon or a Walmart. I've been speaking with Professor Ishwar Prasad of Cornell University, who has recently authored a book on the future of money. Do you think it may become mainstream? Do we see it like in a year, in 2 years?
So at some level, Lata, the Genius Act and the attitude of the Trump administration have already made cryptocurrencies essentially go mainstream, because stablecoins are now going to be more easy for traditional financial institutions like commercial banks to accept. We're going to end up having many more payment rails that involve stablecoins. And even decentralized cryptocurrencies like Bitcoin are being legitimized by the US government, which talks about having a Bitcoin reserve, for instance. So that day of legitimization might already be here in some ways.
Okay. Well, actually, I even saw, I think it was JP Morgan, these are very volatile currencies. I mean, even stablecoin. Tether at one point was ruling at 0.6 to the dollar, and at one point was 1.2 to the dollar. Now, if you have so many people issuing currencies, is it not possible that, not all of them will be viewed by the market as equally stable? Do you see a chance that one stable coin may be less than $1? I mean, people don't take it at face value.
So the interesting reality is that while there was some volatility in the value of Tether in its early, held pretty close to one. I mean, there were periods when the peg shifted by about 3 or 4% for a very brief period when there was a lot of turmoil in the cryptocurrency markets. Mm-hmm. But overall, market participants do seem to take at face value the notion that each of these units of stablecoins is in fact backed up by adequate liquid reserves. But certainly as the number of stablecoin issuers increases, there will undoubtedly be some shady promoters that try to take advantage of the fact that they could make a quick buck. And there is some good money to be made, because one of the key attributes of stablecoins, of course, is that they do not pay any interest. And the stablecoin issuers park the reserves in interest-bearing securities such as U.S. government bonds, which at the moment are paying, in the 4 to 5% range of interest. So it's a pretty good business model at these interest rates, and undoubtedly there will be many more operators that try to make money off this, and that is going to lead to some volatility. And I suspect that there will be a shakeout coming in the stablecoin industry, and that could have some knock-on effects even in the traditional financial system.
There are some people, I think Barry Eichengreen wrote a piece saying that, we could have, he doesn't use the word layman, but we could have some kind of possibility of a crisis for the global financial system or the US financial system because of stable coins.
Now, here is the big difficulty, in my view, about what is happening in the US. The cryptocurrencies industry is getting exactly what it wants, which is legitimization from the US government in the form of legislation and in the form of actual promotion of various types of cryptocurrencies by the US administration all the way to Trump himself. But at the same time, this is an administration that is backing off on practice of legitimization of an entire part of the financial system, coupled with light touch regulation, which might mean that you don't really have the sort of regulation that you need, especially for a class of products that is still, being tested and tried in different market conditions. One could well imagine a scenario, for instance, where there is concern about a stablecoin issuer or multiple stablecoin issuers, and those issuers then have to redeem a significant part of their in principle, liquid securities such as US government bonds, and that at a time when the US government is running large deficits over into other parts of the US financial system, because the US Treasury securities market is really the benchmark for the rest of the US financial system. And of course, that could very quickly spill over into the global financial system. At the moment, the capitalization of stablecoins, for instance, is about $220, $230 billion. It's not large enough, but we are certainly seeing a trajectory where this capitalization is going to increase and it's going to become more deeply embedded in other parts of the financial system. So the risks are certainly growing.
Okay. Well, it is looking scary, and let's hope that by the time we speak next, Professor Prasad, I just want to end with what is even more dominant in our mind space, the tariffs. Now that we have, most of the major countries' tariffs are on the table, what is your sense? Do you suspect the US will go into an inflation because of the general rise in tariffs? Or is it going to be recession? People give us both scenarios, but is an inflation situation round the corner?
That would pass through of tariffs into domestic inflation. The US would start showing up quite significantly. The last month's CPI numbers do suggest an uptick in inflation. But what is remarkable about the US economy, Lata, is that despite the uncertainty created by the tariffs and many other aspects of policies here in the US, the economy has been powering along. Certainly, there are signs of softness in the labor market. Wage growth has been somewhat weak. The economy overall seems to be slowing down. But so far, and inflation is beginning to tick back up. So one could end up in a scenario later this year where what looked like a soft landing might turn out to be much bumpier with inflation rising, the economy slowing down. And that is certainly a very pertinent concern. But the risks of a stagflation, that is runaway inflation with the economy, essentially not growing that much, that risk has diminished somewhat based on the recent data and based on the economic momentum the US has, especially in terms of continuing to generate pretty good product too much or growth slowing down too much either.
Okay, so a mild stagflation, but not a terrible one. You and I keep speaking about the dangers of the tariff and the inflation and the dangers to financial stability because of stablecoins. But if you look at the markets at all-time highs, quite clearly unconcerned at this point in time. So perhaps ours is the dismal signs. Thank you very much for this edition of Indianomics. On that note, more news and updates await you after the break.